Polymarket is a cryptocurrency-based prediction market where users trade shares on real-world events, from elections and economic data to sports, science, and pop culture. Everything runs on the Polygon blockchain, and trades are done in USDC, a stable coin pegged to the US dollar. Instead of betting odds, prices reflect probabilities. Like if a yes share trades at 60 cents, the market is effectively saying, there is a 60% chance that outcome happens. The platform is built as a decentralized application, which means trades are executed by smart contracts on Polygon and recorded on chain. Funds sit in a non-custodial wallet that the user controls, not in an account held by the company. That setup reduces the risk of a centralized blowup or hack wiping out balances, but it does push more responsibility onto the user, especially around private key security and basic crypto hygiene. A major point in Polymarket's favor is cost. Fees are minimal, with reports of taker fees around 0.01% of the contract premium and no direct deposit or withdrawal fees. Compared with traditional sportsbooks or centralized prediction markets, that is extremely cheap and can make a real difference for active traders. Liquidity on big markets like US elections can reach billions of dollars in volume, which is rare in this niche and lets larger positions get in and out without huge price slippage. Combined with real-time pricing, Polymarket ends up acting like a live, crowdsourced forecast engine. Independent analysis has found its markets can exceed 95% accuracy in the final hours before resolution, which is why journalists and institutions increasingly treat it as an early signal of where events are heading. On the transparency and tech side, running on Polygon means every trade and market state is visible and tamper-resistant, which addresses the usual trust issues of centralized bookies. Non-custodial USDC balances offer solid security for people already comfortable with MetaMask, Coinbase Wallet, or similar tools. For these users, Polymarket can be both an investment playground and a powerful way to get real-time probabilities on events they care about. There are real downsides, though. The regulatory story is complex. Polymarket previously ran into trouble with the US CFTC and had to restrict US users. More recently, it has reportedly secured CFTC approval to operate an intermediated regulated US platform, which is a big shift, but the details of how that will work in practice, what markets will be allowed, and how access will look state by state are still evolving. For US users, that means the rules can change, certain markets may disappear, and long-term availability is not guaranteed. The platform also assumes a fair amount of crypto fluency. To get started, users need to acquire USDC, move it onto Polygon, connect a wallet, and manage keys safely. For anyone new to crypto or DeFi, this learning curve and the risk of mistakes are non-trivial. Add in the usual market volatility and the fact that thin markets can suffer from serious slippage, and there is clear loss potential even when the thesis is right, but the entry or exit timing is off. Another subtle risk is how outcomes are resolved. Polymarket relies on an optimistic resolution and dispute mechanism to determine what actually happened in the real world. When questions are ambiguous or edge cases appear, the result can be controversial. Critics worry that large players could try to influence disputes, or that unclear wording leaves room for outcomes that do not match what most traders assumed. Unlike a traditional regulated exchange, there is no strong, familiar consumer protection framework around this. Dispute resolution and responsible gambling style safeguards are generally weaker than in traditional financial or betting venues. In summary, Polymarket is a powerful, low-fee, high-liquidity prediction market for those who already understand crypto, feel comfortable with non-custodial wallets, and treat event trading as a serious financial activity. It shines as a real-time probability oracle with impressive accuracy and transparent on-chain infrastructure, but it comes with meaningful risks, evolving regulation and state-by-state uncertainty, technical complexity, wallet and key management, volatile markets, slippage and thin contracts, and limited traditional consumer protections, or clear recourse in disputes. Anyone considering it should see it as a sophisticated, high-risk tool rather than a casual betting app and only put in money they can fully afford to lose.